All right, everyone, welcome. This is going to be a quiet talking video. We're going to look at this is the Discord for Armor Bull Trading. Got a lot going on here, so if you want to join us, feel free to upgrade. Go on and find Armor Bull Trading on Discord. You can get the link on the Facebook page or Instagram page or anything like that, or get an invitation from someone. All right, you got all that good stuff there. Got some good affiliations, good YouTube recommendations as well. We're going to go on and move on here. So today we're going to be learning about basic technical analysis and indicators. Okay, this one is mostly going to be on indicators, and what we're going to do, this is Thinkorswim, TOS. Now, I'll be honest with you, I have only been using TOS for about 6 months, roughly, give or take a few months there. And what we're looking at is really just the idea of predictive moving, right? So momentum and things like that. So what we're going to do is we're going to right click. We're going to go to studies, and we're going to quick studies. And then you have a lot of different studies here that you can add on, and bearish and bullish candlestick. So check this out. So doji. So it actually gives you a mark on all your doji candles. Okay. Now this is more so technical analysis in general. It's not really indicators. So let's remove that. Okay, and here we go. So just a quick flash, like you've got a lot of different ones, right? So let's just go through here and kind of show you some different examples. Got a lot going on with some of these other indicators, and it looks complicated, but I promise you it is not as complicated as it looks. It just depends on what you're actually reading and looking at. So we're going to go back over here to this AMD chart, and this is going to be the very basic set, right? So we're going to look at different indicators like the exponential moving average, or EMA. We'll look at Bollinger Bands. We'll look at a couple of other things. So now, before we get too far, I'm going to do another video on finding support and resistance, and trying to identify patterns in the candles and where you can sort of predict that the stock may go. So just for example, this is a monthly chart and this is a daily chart. Okay, so you see that there's a lot of difference. You got a lot more candles going on. This is not showing after hours movement or pre-market, so this is all strictly day-to-day and real day trading. Real live days of trading. So let's go ahead and right click, and we're going to studies. We're going to here and all studies, and you just have so many different ones that you can load from. Okay, what we're going to do is go to EMAs, exponential moving averages. Where are we at? Let's see. God, we have so many. So this is one thing about Thinkorswim, where it's not really, very specific when it comes to moving average, but moving average exponential is here. So you on most other brokerages you would see it under the E, but you kind of just got to find it. So this is our first example. Okay, so this is a basic moving average. They default it to, looks like the 9, and which is 9 days, 9 candles. In this chart, each candle represents 1 day. So if you look at the 9, like we're on AMD right now, so we actually have a fairly bullish move that occurred with SPY this week. That is September 27th, as you can see here in the corner calendar. So what we're looking at is the close above here, right? So this is important. So it's been rejecting under here this entire time. So what this EMA does is give you the average of the last 9 candles. Okay, so 1, 2, 3, 4, 5, 6, 7, 8, 9. Okay, so you got your 9 candles, right? And what you're going to do is basically you would take all these values and it would provide you an average. Now, if you just kind of eyeball this directly, you had that one drop here and then you kind of had a rebuild. But the line actually moves fairly synchronistic with this. Synchronistic's not a word, I just made that up. It moves very in sync is what I meant to say. So it's funny when you got different words coming in your head, right? So after hours, you're looking at 105.79, and the market is not open yet. It is Sunday night, or technically Monday morning, going on 4 a.m. over your East Coast here. We will see what happens on the market. But what we're going to do is auto zoom back out, and here's your 9. Okay, so the most common exponential moving averages that you see used on pretty much the vast majority of people's charts. Now, everyone has their own opinions. Everyone has their own different studies that they prefer and different moving averages and all that good stuff. So what we're going to do is we're going to add another one. If I can get back over here. So user defined will be all the ones that I've created. So what you do is go back here, all studies. We'll go back to moving averages again, exponential. We're going to add another one. Okay, so now they're on top of each other. So what we have to do, you see we have them, so we need to edit. Okay, so we're going to change the length. All right, we're going to change this one to another common. Is going to be the 21, okay, or the 30, or the 50. Okay, 50 is a very important one. And then you have 100 and 200. So 200 is going to be an extremely, we're going to add breakout signals so we can make sense of it. And we want the price at close. Depending on, what you've learned, I'm not 100% familiar with all these charting abilities on TOS as far as like really putting this stuff into play. The volume weighted average price VWAP is an excellent indication in general, but we're going to use just close to keep it simple. What we're looking at here is the color, so we can change the color. But first, let me show you. Well, let's change the color so you can see it. Now, in my head, I always use yellow as the 200, and on my previous past charts, I'm going to make the size a little bigger. We have values that are going to be numerical, and up signal we will have green. Okay, and we will make it big so we can see. Down signal is going to be nice and red. I like real red. And we'll make that big so we can see it. It's a down arrow at the high. Okay, we'll keep that. And I'll adjust this if I need to. I can't remember Boolean versus numerical. As far as the arrow goes, I think Boolean is proper. So numerical is going to be our average number here. So let's apply that, and voila. So now that you see this moving average, okay, it can get a little complicated, if you're not really understanding what it is you're looking for, because this is the reason I don't really use these, is because the EMA generally, you can see it's a big drop here, and this is the daily chart, so this is just day to day. So you broke below the 200, it sunk down from a grand low of that day of 76, dipped on down to a grand total of 73-ish, and then it bounced back up. And now once it closed above, most people would take this as a full bull sign. Now, we did go from 79 all the way to 84. So in options, that would be a tremendous move. And if you have, say, 100 or more shares, that would have been a fairly decent little cash gain for you. However, now we've just reached a new high here recent, but we're in a big consolidation phase. Now, what is a consolidation phase? That's going to be where you have this massive amount of candles that are occurring in the same areas, aka a trend channel, things like that. So what we're going to do is get that back out of the way because we're talking about indicators. So let's go ahead and zoom back out. All right, let's see if I can add on this other indicator here. Let's see. Let's add back in our moving average. My eyes are playing tricks on me here. It's getting a little late. There we go. Okay, so there is your 9 EMA. So now we're going to edit this puppy. So we see we got it on the 9. You can see that these signals, right? Matter of fact, let me just keep that there. Matter of fact, let me edit the color. Actually, we always do it green, so let's do green. Let's see, let's do a nice darker green. Maybe a little hunter green, like a little thicker. Apply. Okay. Well, that actually kind of blends in too much. Let's go back here. Let's just keep it blue. So it makes it a little easier to read for everyone. Let's go ahead and add our down signal and up signal. Up signal is going to be, let's go with blue so we can keep it in line with our EMA so we know which one's actually signaling. Okay, so you don't want to confuse yourself too much. Now this we will make dark orange. Oh, that's nice. All right, Boolean arrow up, down. All right, apply. Okay. So now, what do you all notice? I don't have any arrows. I have these arrows here. Let's see what happened. Let's edit this again. Oh, okay, I gotta show more breakout signals. Where is that? Breakout signals, yes. Always put your signals. So this can get very tricky, right? If you're trying to do strictly, and this is the daily chart, okay? So let's try to look for double confirmations on this chart. Let's zoom out, and let's look for something telling us to buy twice. Okay, so what we have here is we have the bounce off the 200, or below the 200, and we're coming back over the top. So we closed above. Okay, so that signals the green signal, and we got a blue arrow for confirmation. Very next day, it closed above. Now, hindsight's always 20/20, so most of the time, you're not going to really be able to predict this massive move all the way up here. Okay, but in this visual spectrum, we can clearly see we have confirmation. Now, here is the most amazing part, is that not only do you have a confirmation here on your 9 EMA, you also have a confirmation over your 200 EMA. Now, if you were to do this and trade this way, chances are you'd be fairly profitable for the most part, but it just depends on how strong your will is to stay in calls and options if you're trading options, or puts, depending on what direction you're actually going for. So I may actually save this study because it actually looks fairly decent overall. I have a lot of custom studies that are scripted that I use in conjunction with each other, but this one actually looks pretty neat. But the only problem is, like, so this candle closed here below the 9 because we have our orange arrow, right? So that's why it actually triggered this arrow. Now, granted, from 90 to 87, that's a nice $3 move, and then eventually it trickled back down. But if you bought your option for puts here and you wrote it to here, and you're like, all right, we're good, we're going to keep pushing down, but then it goes back up, if you didn't take profit, you're going to lose money, okay? And now if you can hold and your stop loss didn't hit, you went back above, so now you're in the loss. If you average down, waited on another confirmation, because this is only a few days, right? Every candle is 1 day. So first day dropped hard. Ooh, that's ugly. Premium skyrocket on the puts. And then you could, in theory, buy calls to go against it to offset your losses for the puts, or cut your puts loose for profit here, buy calls, go back here, wait on your next confirmation. So if you went from here to here on calls, you're great. But if you went from here to here on calls, you're going to start losing, right? You'll still be maybe a little bit of profit, but if you bought an expiration for, say, a Friday ending, and you bought it over here on a Monday, let's just use this for example, because I'm not sure what these days actually are. So what you're looking at is the ability to lose money quickly. So I'm referring to options often because I want you to understand that indicators are very, very cool, and they can really help tune your trading game up. So let me go ahead and dun, dun, dun. We're going to save this study set as indicators 101. All right. September 27, 2021. Perfect. All right, so now let's see how many false signals we have on a smaller time frame. Let's go to the 1 hour, which is another one of my favorite charts. Okay, so what you need to know about indicators is that you have a nice cross. When a smaller EMA crosses over a larger EMA, that is almost always a bullish signal if it crosses very firmly. Now, if it is like riding the line a little bit, the chances of it being a really big move up, or in vice versa, if it's crossing down, the chances of a big move, if it's kind of riding in line with it, is not going to be that much, okay? So one thing, if you just notice how it's flickering, if you hit the signals here on this cross, you can see that the colors change, right? So blue to green, right? So check this candle out right here. This is the one we're looking at. It actually signaled on both accounts for EMA wise. So we had a nice close above both EMAs. Therefore, we got the confirmation signal on both. So that is what we are looking for as a full confirmation. So this hourly, so if you were here and you're like, man, you know what, I just don't have faith in this AMD. These are 8 hours here of trading. And it's like, man, you know what, it was a monster. It got all the way to 105 and some change, and it dropped all the way back down. Over here on this next candle, I would say that's a fairly bearish move right here. It's a huge bearish engulfing candle consuming the entire body here. But very next candle in the very next hour, the dip was bought up big time on this, all right? And then you closed above, and that close above both of these EMAs triggered here. Now, if you bought calls right here, you would have endured a little bit of stop loss, right? So it's not much. It's only, what is that, about $1 maybe? Not even $1, about 50 cents worth. If you can endure that, you'd probably be okay. So if you're trading hourly charts, you're not going to be really worried about a 50-cent move because you're looking for the bigger picture. So if you'd have held that all the way through, you got all the way to 106. If you bought at the money or in the money options, you would have made a nice little profit there, and you can roll on about your day. Let's actually zoom this back out for a moment. So what you need to look for is this right here. So cross. Actually, let me do this. Let me make a nice little square. One cross. So this is a rejection. All right, we got another cross. All right, and that was a nice down and a nice up. Now, if you were to go further back, let's go up to 150 minutes. And let's do from here to here. So now we have dual crosses right here. So this can get very tricky, right? That's why you got to be careful with trading indicators. You can't solely depend on them. You need to have another catalyst or another confirmation. So you can use a different indicator like a momentum, like the MACD, which is moving average convergence divergence, or something like stochastics, which we'll add here in a moment. Let's go to OJ. So notice that's a 150-minute chart, right? 90 days. So 3 months, 150-minute candles. So what you're looking at, and what you need to realize is that you got a breakdown here. All right, you got to the 80 range, right? And then you had another breakout confirmation. Now, how do you know you can ride this up? Well, the problem is you don't, okay? So what you would need to do is go back over here to a larger time frame. All right, and remember this? So now you didn't even cross on your EMAs. You did on the smaller time frame, but not the larger. So what you need to realize is that these areas, you did have a cross here, but this did not on either account. The candle crossed below, but the EMAs themselves did not cross. All right, so that's where you got to get that real verification of confirmation. Okay, so here's the ones we selected. They're not even nowhere near the 200 EMA. So you really need to figure out your trading time frame style. Are you going to be trading for a few minutes? Are you going to be trading for a few days? Are you swinging out weeks or months? Now, rule of thumb, if you're new to my teaching strategies, it is that you need to buy time. Okay, put general rule if you're buying puts. Now, not spreads or anything like that, but spreads are a little different when it comes to calendars and debits and things. But as far as naked puts, you're looking at about 30 to 45 days is really your sweet spot. So roughly a month is where you want to buy expirations on those, because time is on your side, because theta will decay faster. And if you're waiting on a move, you don't really want to buy a 1 or 2 week expiration. And I say that with respect to the game, because if you buy time and your move takes a week or two, like let's just say you got some more money or you made profits elsewhere, and you're really confident in your put position, right? So say, AMD was in this range, and you're like, you know what, I really think it's going to revisit the 80s. And you buy, say, $85 puts, and you bought them like down here, but then the price jumps back up to here. So in that move, that's a fairly substantial move. So if you're not using stop losses or anything, that's going to be a problem for you, right? So these are days. So at this point, this is weeks away, okay? But you did get back to the 85 range here. So that would have taken you 2 weeks worth roughly of trading, almost 3 weeks. So if you would have had this expiration here, $85 puts, well, you're finagling all this nonsense over here. But on this right here, if you decided to hold and not close your position, you could, in theory, average down. So say at this point, you'd probably be, if you bought from, let's see, I'd probably say you'd cut losses, but going from 89 to 99, that's a $10 move. So you just, yeah, it's a fat loss. Let's just ignore that I said average down on that one. But anyway, let's presume that you bought the time. Let's just say you're one of those people that just buys contracts and just lets them ride, and you'll average down if necessary. You don't use stop losses or anything like that, and you're swinging this trade because you know so strongly that you're going to see someday hit $85 or less, and then if you go a few weeks later, it actually went way lower, and all the way down to the low 70s. So say you got your puts right in this range, and you had a few weeks out, and finally, boom, you drop down and you get somewhere in this range. You'll have your puts, and once it gets to that level, you can go on and take profit, because depending on how much the stock is moving, that'll increase the implied volatility, especially when it's going down, and that'll actually boost the premiums on the options, especially if it's more than like a $3 or $5 move. Especially with SPY SP 500 mini, you'll actually get a lot of volatility on those options. Even if the stock only moves like $5, you'll get a really big boost on your options. So now let's go back to the crossover situation. So let's go. This is a nice 3-day chart, and you can see that these marks we had, the nice squares on the crossovers on the small time frame, they are nowhere near, right? So if you're trading a large time frame, like a weekly or a monthly chart, these EMAs aren't crossing each other. They're not even touching. They're nowhere near touching. This is a long time right here. All right, and let's go to monthly just so you can see how far really it is. I mean, look at that. The last time you had an EMA cross was when it was $6 a share. Okay, so the problem with this is, unless you were trading AMD way back here in 2016, you are certainly not going to be able to hit this and like run it up unless you were trading way back then, right? So this is where you drop back to those lower time frames. So let's go in like a 4-minute frame. And if you're intraday trading, you can see, so like right here, like you got your nice bull move. You crossed over, each of these is 4 minutes, and you get your nice bear move down, it's swinging up. You're like, man, I need my confirmation. Okay, first confirmation is here. You broke over the 200 EMA, and you're holding strong. That very next two candles, your EMAs cross. So in between these two, which is another 8 minutes roughly, you have the crossover. So now you're bullish, man. So you can go from here at 105.40 and say you can get somewhere up in this range at this 106 mark roughly. And now you've just made a nice clean break. If you're on at the money options, let's just say you bought your premiums, or say you saw, let's get back over here. Let's just say you figured, you know what, okay, this is a nice dip. You got a lot of support happening around this 104 mark, and it stayed fairly flat around here. It went up and down a little bit, but 104 to 105. Just say you bought your options and you're just waiting it out, okay? What you can do is finally get in here, and then by the time it gets to this crossover, now you have full confirmation to hold. And with that being said, once you got your cross, now you can just go on and assemble the line. Now, here's the tricky part. You see these wicks? That means at one point the price point was below these EMA, okay, the 9 EMA, and it was below again and again, but then it boosted up more. It went below again one time. It didn't close below it. It just went below it. So this wicks, you have to really be careful. So next thing you know, you got this big bear candle that popped up. You got a big bear body here that overtook this nice spinning top doji, and then boom, the next big drop, and right back down to the 200. Okay, so now let's open this time frame up a little bit so you can kind of see a little different view. All right, so here we are. We're back at it with the EMAs. So now we've got, what did I put it on? 13-minute candles, right? So you got 13-minute candles here. Now this is something you could look forward to. You could look at this. Okay, we got a huge breakout and a huge drop. You see how dramatic these candles look? This is craziness. That's why I go over here and look at this hour chart. So now I have a very clear, Okay, it's still, I guess it still looks kind of big because I keep zooming in so much. Let's do this number. Yeah, it's a little more, you know, a little more obvious on this big old candle here. But what you're looking for on, say, a 5-minute chart, if you're intraday trading, you're going to be looking for your EMAs confirmation, okay? But until you get this cross on these small time frames, it's going to be very difficult for you to have confidence in a trade unless you have other, you know, confirmations, either other indicators, or, you know, some good news just dropped, or, you know, the SPY just bursted up or something like that. So let's push this back out to 1 hour, and you can kind of see the difference here in the candles. All right, so we don't have any crosses here. Let's go and get this out of the way. Let's get this out of the way. And now we're going to go ahead and add on a, let's see, what do we want to add? Well, okay, so I'm sorry, your quick study factor, you have the moving averages here. You can add it that way. So I don't like using the simple moving averages just because they're so slow. So let's see what we have as far as momentum goes. I enjoy the CCI. That's a really nice momentum indicator. And then you have, let's see, where stochastic, yes, MACD. Let's see, stochastic slow, here we go. Okay, so this is very explanatory in itself, right? So you have your signal line, which is here, your red line. You can change your time periods and stuff like that. What we're going to do is just go back to the 1 hour chart. It's a little more simple to read, but you get a lot of false breakouts here. So you got your EMA cross, which is fabulous right here, right? So you could have stayed in this trade up to here, but on your stochastic, you got a nice support. But by the time you hit this ridge, you don't know if it's going to make a ridge like this and drop, or if it's going to make, you know, for example, let's see, like a ridge here and drop and then shoot up. So that's an issue that, you know, you have with these momentum indicators. Let's go to the daily chart. Let's try to keep it kind of simple. All right, so this looks like a very clear sign of a bull move here, right? So you have this whole scenario happening to where the signal line on the stochastic slow momentum indicator on the bottom is signaling up, as also you closed over your 9 EMA. So what you need to do is kind of sort of back test it just by looking at it. Let's go on and get these out of the way so we don't have any false pictures. We're on the daily, so each candle represents 1 day. For here, okay, for example, you got a cross and you got a cross. Beautiful. That's a 9 over a 200. That's a huge crossover. And you can see that this big momentum factor right here, that's just clear as day. And you had a really nice bull move pretty much this entire time. And as soon as you caught that ridge on that lower stochastic, boom. Now, the stochastic crossed here, but the candle, I'm sorry, not the candles, but the EMAs did not. So that's what you got to be careful with. Which one is going to be your official signal? Are you going to wait for a double confirmation, you know, like this here where you have both crossing? Or are you going to be okay with closing a trade when you see the stochastic cross back down or cross back up, depending on what side you're on? So here, we got a down and up, EMAs crossed over with a stochastic, confirm. Okay, great. We got a nice bull move, but here's the ridge. Now look at your stochastic ridge. And the problem is you can look at the momentum. So I don't have volume on these candles, but if you look at the momentum factor, it seems like you got a lot more base move coming off here. Even though there was no crossover with the EMA, you got a huge move up. And I actually remember playing this surge. It was very nice. You went from, right around the high 90s. I remember it dropped down this morning on 89. It sat there and just ignited like a rocket over the next few days. It was really nice. So yeah, what we're looking for here. So let's go on a smaller time frame, see what it looks like. Yeah, so it's not very dependable. And this is definitely not dependable. So this is where you have to really be careful because you got an EMA cross here, okay? You got the cross here on the stochastic, and you got an EMA cross here. But look how many candles you've already missed. So if you went on the stochastic, you were good to go. And you got to close over your candle, but then you rejected the next one up. You didn't close over it yet, so you have to worry about that now. Okay, am I going to be able to stay in this trade? And I guarantee the moment you saw this drop, you might have closed your trade. And then just for this candle to drop, you feel good about it. And that wick buying pressure just soars. Next 5 minutes closes above the 200. Now here you make a decision. Am I going to stay in this trade? Well, your momentum's still increasing, so that's okay. But right here, now we got the cross. But you got this red candle right at the cross. Now you're still guessing. All right, so you got to be very careful with these small time frames. All right, now this here, again, you don't have any crosses on the EMA, but you got a stochastic bounce. You got to build on momentum. See this ridge here? If it crossed back over that ridge and then continued in a nice incline, I would just stay in the trade. The moment I see any sign of weakness on red candles, like a solid red candle, like you got all green here, right? So this is 15 minutes. So every 2 sets is 30. So every time I see a red candle, because some of these probably started red, they probably went red and then went back green. But until I see a solid red candle close, I would stay in this trade. And the problem is this is only a 15-minute chart, so this is not giving you a really big bullish sign, because if you go from, this is current, right? So if you go from 15 minutes back to, say, 4 hours, well, you have a huge deficit difference here. You got a nice big bull and then drop. Bull, and then are we going to drop? Or are we going to continue up? Because this could be essentially a nice bear flag. So you can go boom, boom, and boom, boom, right? So let's go to the 3-day and see how good bull looks. So you lost momentum, right? Now here's the problem. Is this stochastic going to swing down and cross back up and then signal another move? We do have our signal here that we closed above the 9, but this very next candle is sitting basically on top of it. So until the market opens tomorrow, which should be green, so we should open around 106, 107. And if that occurs, we know we're going to be good to go. And we should be able to, do calls. If you saw my page here, I actually called over 107 on calls on AMD. And just so this is a recorded session, you can see that that was a true factor. Let's go back down to a weekly chart. So we're all in all, right, you got to get the basis of this, right? So you're writing 9 EMA. A lot of people talk is cheap, man, because you can say, oh, I just rode the EMA all the way up and I didn't sell because it stayed and closed above it. And in some cases, those people are telling the truth and they're making really nice trades. But if you're using EMAs only for confirmation of buying or selling, eventually you're going to lose money, or you're going to make a lot of money and then still depend on the same thing and lose a lot of the profit. Okay, moving on. So let's take this back to monthlies. All right, so let's see which one called first. Let's see. So you can see that none of these are hitting. So you got bottom dollar moves, but the move is very small. So here we have our crossover. All right, but look at the stochastic is way back here, crossing up and pushing on the momentum. And then you had the nice move, and then it rejected the 200, came back down. And this is monthly, so this is all months worth of trading on these candles. And then finally it closed above, but look at the momentum. It went way up on price, right? So you went all the way from $8 to $15 in price, but then the momentum was dying the whole time. So then you're just converging down and down and down and down. All right, so let's increase this picture here. So you had your cross, you had your big momentum, it was burst, which is probably a lot of volume here, but the candles don't really reflect that. And you had another little burst, okay? But now you got your huge drop. This was the 2018-19 flash crash of 19, end of the year roughly. And let's see, yeah, right there. But AMD is a very strong stock in my opinion. So like even 2020, let's see, where is COVID at? Yeah, right here was COVID. So you had this huge burst out to $60 a share. And then it dropped all the way back down to 35, 34, 36.75 was the low of COVID. The very next month, everything turned right back up and shot through the roof. Okay, so let's go back to the daily, because I feel like the daily is really the best chart to look at with this. The 4 hours got a lot of breakout signals, so it can really mess with you. So let's put it back on the daily and let's continue on. So let's go ahead and let's remove. Let's see. We're going to take off the stochastics and we're going to, oh, this is another way you can add, I'm sorry. So if you click on it to remove it, You can go here, you have volume, which I don't like to have on just because I feel like it's too much to look at. And what we can do is change this EMA from a 9, or matter of fact, you know what, we'll leave that one alone. Let's change the 200. Let's change the 200 down to a 24 day. Okay, let's see how much better our signals get. All right, so we're still not really having crossover situations that often, but you do have a nice cross here. This is a really massive candle, so you gotta be careful. So that cross signal, okay, but if you saw this candle, you're not really gonna be thinking you're gonna get a huge bearish candle the very next day. But because the EMA crossed and you confirmed with this candle, now if you would enter puts here from the 104, you went all the way down here to 99. So a $5 move on options with AMD would have been pretty nice if you'd have been at the money. And then vice versa. Now you got this huge, not quite a dragonfly, but it was getting up there. And then you had the very next candle was bullish. In this scenario, you could have taken calls here and rode it all the way up so far to around the 106 range, 107. So you just got to be careful. And this is why, if you see this kind of defined line area here, this is why I'm actually saying 107 for calls, because that puts it right over this mark, which pretty much defeats all of these. The high here was 106.99, and the high here was 107.30. So I think once it breaks over 107, it's going to push up. But we need to make sure that this is not a continuation across to make a pennant or a bear flag or a bull flag, and then ignites up or drops back down. Because if it fails to deliver here, it's going to just drop. So you got to be careful. But you can see that the 9 and the 21, 24 EMA, they really don't give you a lot better signal in the higher frames. Let's drop this down. So still nothing there on the 1 hour. Let's go to 5 minutes. 5 minute, we got a little cross going on here. And here's the thing, if you're looking at these like I am right now, on your sharing the screen with me, if you're looking at this EMA cross in live motion, like say we went down to like a 1 minute candle, like, and you got crosses everywhere, right? But if you see this one, and then you get a confirmation, and then you get another confirmation, and then another confirmation, at that point, and then if you add your stochastics back in here, let's see if you have any better example here. Let's see. Momentum. Let's put stochastic slow back for example reasons. All right, where's that cross? So right here. Okay, so you did have a bounce, right? You have a momentum shift, and then it went back up. You crossed that damn near the same time. Excuse my language. So right here, this big bullish candle, that gave you the cross on the close above the EMAs, but the cross actually occurred on the next candle. The momentum's still building, so far you got a pretty good way to stay in here. And at this point, the 9 and the 21 are actually respecting very well. So your difference here in your high would be 105.42, and your stop loss 105.27. So that's only about 25 cents. You're pretty good there, and you can maintain this move for the rest of the way up to almost 106. So that's a 1 minute chart. But when you go back to the 5, it's a little different to look at. Okay, so these things you really have to just be careful how you're reading the charts, and maybe don't depend on the indicators 100% to give you a buy and sell signal. MACD, TTM squeeze, those things, little different indicators. Everybody has their own sets that they like to use. So let's go ahead and remove stochastic. We're going to put my other favorite indicator for momentum, and that is the CCI, but we're going to use CCI average. Let's see what kind of motions we have here. So that's hideous. So let's go and change the settings. I actually enjoy it being like 250 or 200. And the reason I do this is because it's a much more dramatic move. So CCI average length 9 candles. And let's see the cross. Let's match our EMAs to see if we can get some real signal choices here. Let's change our colors. Let's see, let's go yellow. Overbought, which is going to be a buy signal. A sell signal if it's overbought. Let's go over here. Let's make that 5 because it's going to give you your arrows. Let's see, down arrow at high and then oversold, vice versa. It's going to be a buy signal, so we need to be green. So let's do Boolean. Let's do a down arrow at, I'm sorry, up arrow at the low. It's going to be your buy, so oversold. Okay, make those big so we can see them. All right, this is hideous color, so let's go ahead and change this to, let's see how this blue looks. Maybe 2 on the width and the CCI less 2. All right, let's see how terrible that is. Oh my goodness, that is hideous. That is absolutely hideous. I don't even know what I'm looking at right now. So basically, it's giving you, okay, I see. So let's go ahead and edit that one more time. Let's see. Yeah, let's just keep it this way. I think that's going to make this a little easier to look at because these are your ranges now. So 200, this is how I have it set for my charts anyway. All right, so now you have your EMAs, right? So you have an EMA cross and you have a momentum, but you don't have a cross. You have a cross way back here at the low, which just so happened to be right when the momentum shifted from selling over to buying, right? And then you have this nice cross on the on the CCI, Commodity Channel Index, and you pushed up, and the momentum pretty much just stayed increasing the whole time, which just so happened to carry along with the candle movement. EMAs finally crossed over, but now the momentum shifted a little bit. You swung down again. That same thing occurred here. So you're selling and buying, and then selling and buying. And you can see how it kind of fluctuates with these candle movements. All right, so that's the daily chart. It's not really a real definitive. Yeah, because even here, the crossing happens way sooner. Yeah, so we crossed right at the bottom, way before that candle crossed. Let's go with smaller time frames. See what we get. That's a little better. Still happened about, what's that, 2 candles ahead? Right there. So you get your cross, and then your cross about 4 candles later. All right. So let's see. Let's look at longer time frames. It's a big double top situation on this commodity channel, but you had a huge momentum volume. So, okay, so let's phase this one out of here. So it pretty much acts as RSI almost. Let's change this around. Let me put the time frames a little differently real quick before I get rid of that one to see if anything really adjusts on it. Because I don't really use the 9 and 21 EMA like that. I used a couple of different ones. So let me change these. Let me put that back at 14. Let's see where we come in. Yeah, you're not really getting the same crosses. Let's give it a longer moving average. Let's do 50 and 13. So now it smoothed that out, if you can tell. It gave us a nice smooth transition factor versus what we would have. It's still a little jittery, don't get me wrong, but it's following the candles pretty well. But like right here, for example, you have this swing down, and you can see the yellow line follow my cursor. So candles swinging, yellow line swinging down, and momentum starts to shift. Now you have your confirmation on the bounce on the CCI. So this is not a cross, but is a support. But then you got way up here in the 200 plus, and that's when you reach that max cavity. So see, once it crossed over, see, this is my buy range right here. Okay, and then the same thing with the sell, I'm selling here. And that's, ironically enough, that's where it actually maxed out. So you got here, I bought. Now when you see the peak, you got to be careful, but a lot of times when you see a peak, you got to see the confirmation of the peak. However, if you went from, let's see, this is about, 93 anywhere near 120s. Even if you did wait till this candle here to sell, you still made a fat profit if you had at the money contracts. And then once you see this cross down over the upper line and the cross down over the other CCI line, you already know that the trade is dead. Now the problem is you have these momentum shifts, right? So let's see. So here, and I love TOS for this because you can't do this on a lot of other ones. Look at this, it's just following each other, right? Now you have it checking itself. You checked it once, Okay, and then check that again. That's the same thing we're doing. Is it going to reject and continue down? To me, honestly, it looks that way, but it could give us a nice breakup. So like this set here, add a little box so you can kind of see what I'm looking at. And then the same situation here. We could have the same scenario unfolding. Move it back a little bit, open it up a little bit. There you go. So you had down, up, and are you going to break out and reject back down? So we could potentially get back to that 107 and then maybe get back to 114 for a new resistance. But if you go into the 107 calls, I'd say be very careful around 110 and 111 if you get that high. Otherwise, it's rejecting this trend line really, really well. And so I'm going to be monitoring this. So let's go down to a smaller frame. So the cross is still occurring long before. All right, let's go back to the daily. Let's delete all this stuff out of here. I will put one more indicator on here, which is my favorite of all time. And if you know me, you know what it is. So a lot of people use a lot of different indicators, right? I use the Bollinger Bands for pretty much not really a guaranteed knowing of price projection, but it's really accurate when I look at the projections between the daily, monthly, and 1 hour chart timeframes. And then I'm looking at the Bollinger Bands to a different deviation than standards. And I'll show you that right now. So you go to Edit Studies. We're going to go ahead and take the CCI. Matter of fact, we'll just leave the CCI there. Actually, no, we'll take it off. Okay, let's go back here. We want the Bollinger Bands, okay? So you have all these different ones. So you're looking for just the Bollinger Bands, add selected. Now this already actually has my settings added here. So what you need to do is just make sure that you have the proper ones. So I set mine to the third deviation. So we go to settings. All right, I have it on the 50 moving average. Okay, so this literally acts as a 50 moving average. So you don't even need to have a 50 moving average on your chart if you have this set up like this. I set it to the third deviation. The standard is 2. I went to exponential on the moving average. Now, if you do weighted, you'll probably get a little different scenario occurring. So just be careful on that. But as far as, let's see, lower band, let's keep that, looks good, and voila. So what I'm going to do is I'm going to change the color of this to purple. That way this doesn't get very confusing. Nice magenta color here. Okay, so I need to make my Bollinger Band middle line a different color, which we'll do red. That's what I always use my 50 for. So now, see how crowded this gets? It's very confusing. Okay, and I'm going to cover this and then I'm going to end this video. Oh, I love orange juice. All right, so what we have this scenario to where these Bollinger Bands are creating this huge amount of volatility, okay? And you have different expressions like bottlenecking. So on a smaller time frame, you'll really be able to see it better. Like this. This is called bottlenecking, where it goes from a really volatile move, so aka this gap down created this massive opening, and then it started bottlenecking, right? And now we're bottlenecking again, right? From here to here. So bottlenecking, and most importantly on the Bollinger Bands, if you didn't understand what I said the first time, the most important thing was the settings. So go back to your Bollinger Bands, make sure it's 0, 50 moving average, and 3 and 3. The 3s are going to be your deviation. If you don't have the proper deviation, it's not going to work out the same as what I use it for and how I use it. So you can use the second deviation, I guess on really small time frames, but like some people use it, for example, like this. They're like, okay, well, on the second deviation, if it hits the top, I know I'm buying puts. Well, let me just show you what it looks like on the 2. Matter of fact, let's just add another one if we can put them on top of each other. Forgot what I was doing, sorry. Let's see. Let's add another Bollinger Band and change the settings to All right, now let's see what happens. Oh, sorry, let's change the color so we don't get confused here. All right, let's put this on. Let's make it all white so we can clearly see where they actually go. That, and this one, and apply. Okay, now you tell me if you saw on the second deviation, if you hit right here and you're like, okay, I'm buying puts, you have no clear direction that it rejected that, because the second deviation is not really a good sign for calls or puts, because a lot of times on the second deviation it'll step out of range, and if it steps out of range in a big way, chances of it moving up are pretty dramatic. Okay, so this is a 1 minute chart, so let's go to a larger chart and you can see the big differences. Okay, so in some cases they get close, but you can see there's a clear deviation range here. So you got the second band, right, the white. You got your mid band, which is in line with the 50, so we kept that the same, so it was very easy to read. Matter of fact, let me make it even easier to read. Let's get these EMAs out of the way. And we'll see what it really looks like. So exit that one and that one, apply, boom. Okay, so we have our EMA. We'll go ahead and make that, let's go to the other one. I'm just adjusting these so we can properly see exactly what we're looking at here. So I'll make the mid red just so we're not confused. Okay, so now you have your 50 moving average, which is going to act as your support. Okay, all these different scenarios here. So support, let me just flag it. Support. And support on the EMA is what I'm referring to. You got a little channel of support. And a couple different scenarios going on here. Got some bull moves with bear moves. Okay, so anytime you break below the 50, chances are you get a bear move coming in, and vice versa. If you break above it, chances are you get a bull move. So you got to be careful with those just to make sure you're in line with what you're actually trading. Make sure that you're paying attention. Okay, for the Bollinger Bands, this is the 1 day chart. Remember, we have the third deviation. We stepped out of the third deviation into the fourth deviation, which is not unheard of course, because it happened here. And it's probably happened on many other stocks, especially things like AMC, GME, things like that just blew out of the water. All these pumping ups you have now with all these random stocks popping up. And what you're looking at is the max level of right here where this stock chose to go before it rejected and came back into the third. And not only that, when it closed, when it tried it again, it pushed back down. So at that moment, when it broke through, came back down, when it rejected that third deviation again on this 1 day chart, I know from that point it was coming down. Okay. And outside of that, once it gets down and starts to move in this range, that's when you want to definitely get out and take your profits and move on, because otherwise you could try to write it down. But if you wrote it down to here, you held, oh, it's going to keep going, but then it goes here. Hopefully you stopped and took profit somewhere in this area, but if it bounced back and you weren't paying attention, that's a $7, $8, $9, it's a $12 move that you just lost a lot of money on, even though you did puts all the way from here. The volatility would have lost value by then and you would have lost money. So you have to be very careful with your indications, right? So, okay, here we go again. Now we didn't get it even anywhere near the second deviation. So you tell me how people are day trading on Bollinger Bands, or not day trading, but swing trading on Bollinger Bands on the second deviation, because it's not even giving you a proper move, because the third is actually giving you all the value you need, because it bounces up to the third, it comes back, bounces up to the third, comes back, bounces up the third, rides the third, breaks out of the third, comes back. Eventually it does come back. Now the problem with getting in a scenario like this is you just have to follow the volume. And in this particular scenario, as I mentioned earlier, I was watching this occur and I was trading this, and it was massive. It was like literally straight 3-4 days of just power. And obviously if you were in puts thinking it was gonna hit this one and reject, or even this one for that matter, you would have known, okay, well, let me go ahead and get out of my puts because it's not stopping. But you have a mild trend occurring here, just like we saw on the other one. So we did break above the 50. We have an opportunity. If you kind of eyeball your trade, all right, you might come up to about right here in this 109, 110 range, which is another support area. If you can see these, look at this nice zone right here where the candles are rejecting, right? Let's put a little drawing there for you so you can see. That's all this area here. That's what we're looking for. Price target is going to be 111. Put that in my chat. Dun dun. Excuse the moment here. 111.50. And there you have it. Okay, back we are. So pretty much what I'm looking for is either a rejection on this trend. If we got 107, we know we already broke off with this trend, as long as it pushes up and confirms. And if it does push up, 111 rejects, comes back down, we want to see it above this trend line to continue up. And then we know we're back on a bull path. But after this massive move, coming back to the 50, you can see if a massive move slowly consolidates, comes back to the 50, test the 50 again, now it broke down, goes back over, test the 50 again, and it breaks down. So now here we are again, working the trend. This is our first test. Now we got to find out, are we going to push right back below the 50, or are we going to push up? So that's for us to figure out, and we'll see what happens. But as far as, let's go right there. But as far as the actual Bollinger Bands go, this is the normal deviation, which is the second, which I do not like. And now once I remove this, I go to edit studies and get rid of the second deviation. And voila. Now we have a much cleaner signal chart of what we can actually do. 150 minutes, my favorite, or the 1 hour. Let's get rid of this. No, not that, or this one. So if you have after hours on, which is all the very light colors here, it's going to make it very confusing when you're looking at charts. So I would say look at it on a little larger scale, maybe like a 4 hour. It's going to make it a little easier to understand because that's 4, right? And you can see these signals happening. So this looks like a nice big move up that's potentially coming in here. Let's hit that 19-minute and see where we are. But again, if you're intraday trading, you're not going to use Bollinger Bands for intraday trading. The 50 is giving you a help because once you closed above it, okay, close above again, take this little at-the-money contracts here, and you went up a little bit, maybe 50, 60 cents, and take profit. I mean, you can swing 5 to 15% on at-the-money options fairly decently if you're jumping up in the 15 to 50 cent range, give or take. But you got to be careful. Don't buy short expirations, and that's where people have a problem. They think because they get 25, 30, 40, 50, 100 contracts on a single week expiration, they can make a lot more money. Well, in a lot of cases that may be true, and in other cases it's not. Because the problem is if you get caught holding the bag on short expiration contracts and you don't cut your losses very quickly and it moves against you further, you'll take $1,000 trade down to a few $100s very quickly. So I really hope this has kind of enlightened some. Let's go to 3 minutes and see. Yeah, so right here, right off the bat, you went up, you broke over, rejected. Went up, broke over, rejected hard. Hit the bottom, bounced back up. So with this is essentially an average true range factor for the Bollinger Bands to control. Think about it as a dog on a leash, and he starts here. This is his runner, but he can go as far as he can this way and as far as he can this way because he's chasing, say, a rabbit or something. But as soon as he gets too far, he gets pulled back in, all right? And he's like, all right, man, that's winding me out. I'm choking. I got to get back to the spot. All right, so with scenarios like this is a weekly chart. We broke over and closed over the Bollinger Bands. And this was a whole week of trading. It was about 4 days worth or 5 days worth. But you saw that, and when you come out of here, you know you're going with puts. So you went from 122, even if you bought at 115 and rode it up and ate the dirt a little bit on this, you would have been just fine because you got all the way back to $99. And that was a fire signal right there. Matter of fact, I think it was, let's see, where's my support? Yeah, right there. So this was the support factor that it broke out over the 94 range. All right, and you got your big 95 break here, and then now you started gaining support on the way back down. But I was looking for 95, which was this zone right here. But then instead of it coming all the way back down, it has not yet, but chances are it will come back down to the initial break area and confirm for a new breakout. Or we'll use the 50 EMA and we'll continue this nice trend upward. Now, last thing on the Bollinger Bands, as you see, they're coming back together. They're converging back together. Okay. Matter of fact, let's see. Let's go 1 hour. You can kind of see them coming a little better together. They're coke bottling again. So what this is doing is the decrease in volatility, okay, is what's causing this to happen. And also the market scare that dropped here, that caused them to come back down. So, but now at this point, once the candles get close enough back together, all right, so they come close, not the candles, I'm sorry, the Bollinger Bands. Once they get close together, you're going to have a breakout again. Okay, so when they come back together, you're either going to drop back down. Oh, too far. You're going to drop back down to this area, build more support, and then push back up. Or it's going to reverse and push back up again and try to probably likely retest the new highs. And I would probably project. So look, if you look at the top of the screen, I guess I can draw on it with the little thing. Let's see. So look right here. Okay. So you see 131, right? So let me exit that. You see how it says 131? That is right where that box is. That is the projected high on the 3-day chart, moving average up. That is how I project these prices, okay? Let me put it back on the daily and I'll show you the difference. So here, my box is in the way, hold on. Clear. So right there, 124. So watch very carefully. We're gonna close that and go back here. Okay, boom. So 124 is accurate on the upper Bollinger Band projection. So essentially back at the high, 122 and change plus. Okay, so the issue with that, and if you're not understanding, it's right here. This is the number that's right on the other side of this box. Matter of fact, let me make it a little easier to read. Right here. Okay. Boom. 124.91. That is the number that I am looking at projecting up to this upper Bollinger Band once the price consolidates and pushes back up. Now, if you activate this drawing, run that up, a projection based on these other previous moves, we can timeline what we think it's going to take to get to that level. All right, we said 124. Right about, what day is that? That's February 2022. So now think about this in perspective, okay? The market gets a little crazy, and I mean, again, this was 5 days, but now that we've built a consolidation path, which is going to be roughly, in my opinion, this range, support here, you got support going on here. You'll probably move sideways because AMD loves doing that. But I think it's going to be something like this. And you'll consolidate somewhere in this range and then eventually push back up to the 124. Now, it's all going to depend on the market as a whole. But by February, we should see 124 on AMD. And, you can go to your option calculator and figure out, what's going on there. So, but with that being said, I think I'm going to end this video. Hopefully I touched on things that, make sense to you guys. When it comes to trend lines, I'm going to do another video on trend lines. Not tonight, probably another day. Cancel that. And I just want to try to provide some sort of value. I know I probably sound monotone. I'm terribly sorry about that. All my kids and everybody's asleep, so I'm trying to talk low. So what I just want you to do is just try to understand the market in general, okay? Don't think, oh, what happened? Where my little thing? Oh, okay, it's out of the way anyway. Are we still recording? Am I still sharing screen? What happened? Okay, I don't know what happened. I'm sorry, guys. Hopefully this really covers some basic information for you guys. I'm hoping that it's not something that seems very confusing. If it was confusing, I hope I kind of helped you not be confused. So with that being said, we're gonna reset this, and I'll go through this one more time real quick before I end the video. Bollinger Bands, 50-day moving average set to the third deviation on exponential. Let's go ahead. Let's change it to weighted and see how big it changes. Not terrible, but it gave a little more solidarity on this situation here because it rode up to that point. Let's go ahead and add. Okay, so I saved this study, so what we'll do is we'll go back here, user defined, and where'd it go? I don't know. We'll have to find that. Anyway, let me just put them back. Okay, so moving averages, exponential moving average. One more time. Here we go. So that's going to give you the 8. We're going to edit. We're going to do, let's see, 10, 7. I guess we'll just keep it on the 9. We'll see how it turns out. Set it as size 2. Up arrow at low. Going to give it a nice big fat green arrow for a buy zone. Make it big. Down is going to be a nice big red. Okay, make it big. Yeah, I guess that blue is okay. We'll apply. Okay, so now you got the 50 with the Bollinger Band, and you got the 9. And now we're going to make sure we show our signal. Yes, apply. Okay. And now we're going to go back and we're going to add the other one. What happened? Where'd my other one go? All right, let's do it this way so it didn't kick it out again. Sorry about that, guys. Hopefully, if you've watched this far, thank you so much. I really appreciate your time. Let's go with the let's go maybe the 13. Close price, breakout signals. We're gonna make it like a nice magenta color, and set it at 5, 5. So down signal, we're gonna make this one. Since it's bigger, let's actually make it red. Up signal here is gonna be green. Oh, this is supposed to be purple, my bad. This is the one that's going to be nice green. Okay, looks good. All right, and now we're going to put here, put in a yes. We'll leave it at 9. We'll leave it blue. Up signal is going to be, what color did we say? Blue. Okay, 5. Down is going to be orange. Five. We'll give it a 2 width so it's not so scrawny looking. And yes, okay, apply. Let's change the size on that one. You know, something I normally do is actually make these a little bigger, so you can actually tell the difference between the two. We're gonna go pop this Bollinger Band back in here. Actually, you know what? Let's see, you got your EMAs. Let's see how we like this on a small time frame. Let's see. Let's go to 13-minute. See, it's just so sloppy. I don't like it. It's too much going on. Let's see, edit studies, and let's add back in. Oh, MACD. I forgot to do the MACD. We'll add it just so you can see what it looks like. Now for this, I'm going to change the slow link to 30 and put this at maybe, let's do a 10 and a 5. Show breakout signals. Yes, exponential because it's going to be faster, but we can do a weighted average on that. Let's go ahead and just apply it and see what it looks like here. Oh, it's tremendous. Okay. So we got weighted, we got 10, 30, and 5, and we have a nice situation occurring here. So what you can do is get real comfortable and crazy with that. Change out your colors. So you can see that this ugly signal coming down is this hideous yellow color. Let's make it gold. Give it a 2. Let's see. Yeah, so you got positive coming up, green, positive down. It's got a really nice flow to it since we're looking at it like this. The 0 line is purple. That's not bad. Up signal is going to be much larger than that because we can't see it. That looks good. Down signal is bigger and red because we like to be able to really get that, signal in your mind. Okay. 0 line width is fine. And it tells you actually what it is, for the most part. Like if you go to Google, what MACD is, etc., it kind of gives you a nice breakdown. Let's see. The value is hideous blue color. We'll just open it up. Matter of fact, let's make it dark blue and see what plays tricks with our eyes. Apply. Oh, that's pretty. Let's see. Let's go change. Let's see what color looks good. Let's see how bad white looks. Make it bigger. Whoa. Whoa. What just happened, bro? Oh, and you can change the size of your stuff too, so you can see it better. Let's put this back on a 1 hour. Oh, that's a really nice indication there. So you gave me an up signal right at the cross, which just so happened to be a close above this candle, even though it's an ugly bear candle. We got one here too. We got the MACD up. So we'll see how this works out. Let's go on a small time frame. Let's see if it would have made us money on this trade here. So signal down, huge bear candle, but at the same time you entered the trade, you'll probably end up losing on this because it's going to come back. And you got up again and down, up again and down. See, there's a lot of false signals happening here. Let's see. So this one actually worked out, but you also got an EMA cross up with it at the same time. So let's do this. Let's go bigger time frame. Let's see where we got the power. All right, can you see how my lines line up here? So we got 1 arrow, 2 arrow, and 3 arrow. We got a triple confirmation here, going all the way across the board. Whoa. What's happening? Anywho, so you had your sell pressure. Here's your buy pressure. That's a huge dip, Jesus. Let's go bigger. All right, so MACD's killing out. So basically the MACD is telling you that it's going to go down right now. So the only problem with that is how low is it going to go, right? So with this down signal, it had a big confirmation and an EMA cross. So this actually worked out. What chart are we on? 4 hour? So this actually looks really good. So you got an EMA cross and a MACD cross at the same time. And this is on a 4 hour chart, which is a pretty significant move. And you got a big old swing, and now we are verging into a possible cup and handle situation here, and we just have to see how this MACD works out overall. Let's go back to the 1 day, and the MACD is telling you, it's a good buy signal, but that doesn't always mean it is, because you're getting the EMA potential cross, and you're also getting the MACD cross at the same time. So this is going to be another confirmation. We're going to go ahead and post this on where we just were on good old Discord. Boom. There we go. And we're going to leave this chart active, and I'm going to use it tomorrow and see what happens. Well, we got 30 minutes to the market open. Hopefully you guys all enjoyed this video. I do appreciate everything. If you're part of my chat, part of my YouTube channel, subscribe, like and subscribe. For the algorithm, hit the like button and all that other nonsense everybody says. I appreciate it. I don't do it for clout. I do it for you guys to actually learn something. I know I've been talking very slow and quiet in this video, so turn your volume up and hopefully you can hear me good. AMD looks like it could potentially be a good move. Since we're looking at all these other things, let's look at SPY real quick. That's a nice dive, but you are getting a crossover. Let's get a longer 3 days. See, 3 days is showing us that the selling pressure might not quite be over yet. Let's see. So this number finally reconciled. But yeah, it was already shifting back upward. Okay. Let's go weekly. Oh, for the record, you're getting my free target information here because I think by October 2022, based on this literal chart right here you're looking at on my screen, this is where I projected that the market is going to go by this time frame. So there you have it. I think we're going to see that 385. We're going to get a close up here. Pretty decent depending on the end of the month. And we're going to potentially make it all the way back down here to 200 to 245. I believe 240s is going to be the support, as you see here. It made it really strong way across the way in both of these scenarios. So I do think those 240 mark is going to be probably another support. So you got a triple bottom, which may signal a longer bear term market. Or we have another massive flash crash all the way down to 190s, and then we simply soar all the way back up. And then that would give us another all-time high of probably, I don't know, I would project maybe 500 and something if I had to really put a tag on it. So there you have it, and there you see. I thank you for watching. I really appreciate, again, any support. I did a pattern day trading change.org petition, so hopefully you guys can give that a sign if you have not already. So enjoy. It's showing us that SPY is currently at 445. We're not going to be buying any stock, but 445.91. So Jay the Trader is amazing at projecting these target openings for SPY. So yeah, you're definitely looking at potential for that. We got this big cross happening right here, so this is a very huge potential for SPY to make a big run again. And if you see a very similar pattern here, you got a drop, you got a pick up, same thing here, drop, pick up, and we're at that same crossing scenario, and we could have a very big bull move happen. So any puts you may have might be a good idea to close them out. No trading advice. All right, I do thank you all for watching, and enjoy your evening.